In this video, I'm going to show you how to calculate federal income tax withholding using two methods. This is problem PSA 3-5 in your text on page 107. Number 1. Thomas Fortuna married 6 federal withholding allowances, earned weekly gross pay of $745. For each period, he makes a 401k retirement plan contribution of 10% of gross pay. The first thing we need to figure out is his gross pay the same as his taxable pay for federal income tax? Per the chart on page 87, we see that 401k contributions are not taxable for federal withholding. So $745 gross pay times 10% for his contribution equals $74.50. We subtract the contribution of $74.50 from his gross pay of $745, and we get taxable wages for federal income tax of $670.50. Looking at the wage bracket method, we will go to page 247 to find the married person weekly payroll period. Now we want to look down and find the row that his taxable pay of $670.50 falls into. That would be the row that says at least $670 but less than $680. Now follow across on that row to the column for 6 allowances, and we see that the federal withholding is $4. Let's move on to the percentage method. We go to page 242 to find the amount of the allowances. Looking at the first row for weekly pay, we see one withholding allowance equals $77.90. But this employee has 6 allowances. So step 1 is to multiply $77.90 times the 6 allowances, and that equals $467.40. Step 2 is to take the taxable wages minus the allowances. So $670.50 minus $467.40 equals $203.10. Moving over to page 243, we're going to use table 1B, B being on the right side for a married person, to calculate the tax. The first row is for wages over $164 but not over $521, which is where this taxpayer would be. The tax is 10% on the amount over $164 according to the table. What that is telling us is that the first $164 is not taxed, but whatever is over that will be taxed at 10%. For that reason, we go back to step 2, take $203.10 minus $164, and that equals $39.10. That is the number that we multiply by 10% to find the tax of $3.91. Comparing the two methods, remember that with the wage bracket method, we had a total tax of $4, and with the percentage method, we had a total tax of $3.91. They are very close, as they should be. The wage bracket method will always result in an even dollar amount of tax, whereas the percentage method will rarely result in an even dollar amount of tax. It could happen, but it is not normally the case. We always use the wage bracket method unless instructed otherwise, or the taxable wages exceed the table. The result of either method, again, should come out very close.